Friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the weekly market analysis, and this is for November 8th, Monday, tomorrow, 2021, new week that begins in November. If you're not subscribed, please subscribe and share with your friends so that everyone benefits. Thank you so much. So without wasting time, let's get into the analysis. What exactly happened in the last week in the price action of the patterns. We'll have charts ahead. We'll flip between the two. So Nifty managed to close green if you look at the weekly candle. It is a very truncated week with two holidays for the first time, and it closed just 0.5% of up move, but we have a bullish harami candle in the weekly. Bullish harami is indicating a reversal from the current small downtrend from the all-time high levels. Could be, that indicates that there is a potential for that. There's no confirmation. So you can see that there is a resistance at the 18K. Banknifty also is the inside bar. Right? What do you say by inside bar? It's a big bar and then a candle is there inside that. A big bar and a candle is there inside that. Right? So right side you can see the Banknifty. Right? So that's the price action that you see. And so it's a pulley at 0.5 up move. So the main thing is the resistance is seen at 18K and 40K. We're not considering the Vauld trading day for the daily candle information. So the daily candle, it seems to be this is a daily candle. So this is the weekly candle that we're talking about. So this is a inside bar. This is an inside bar, and this is looks like a harami. Means the small candle is at the tag end of the large candle that engulfs it. The large red candle. Right, so this is the weekly, and the daily is, if you don't consider the Vauld trading day, you can see the last candle is a bearish wide range candle for both Nifty and the Banknifty, right? And you can see that it is here it is resisting. So the Nifty on the left side, it is resisting below the 20 moving average, and Banknifty it has taken the support of the moving average, right? So that is exactly what you see. So that's the price action. So Banknifty has fallen off the median. So Bollinger Bands, if you see, you can see that it has been rising, expanding, and the expansion has not contracted fully here also. It is fully expanded. The volatility is fully expanded. The width between the upper and the lower bands are high. Here there is resistance on the bands, and the one thing that you can understand is the up move has turned now sideways. You can see. So here you can see the upper band is moving up, and now it has come sideways. Upper band is going up, now sideways. So that means what? There could be a consolidation which is going to happen in the next so many weeks. We never know till this contraction happens before another expansion happens, right? So there is going to be some weeks or months of consolidation ahead, but within a volatile high range. It is not within a small range. So that means it can be very volatile, and consolidation is ahead. That is what the Bollinger Bands helps you to make understand. Right, so candle patterns slightly bullish, but Bollinger Band says consolidation ahead. There is resistance on Nifty and the Banknifty. Banknifty has taken the support of the Bollinger Bands, but Nifty is resisting at the Bollinger Bands. And 18K breaking up upside and 40K breaking upside are the two tasks ahead of the Nifty and the Banknifty. Support and resistance for the next weeks. Right now, you can see the Nifty has got support at 17,850 below, which is the previous resistance. And then if that is broken, then you have 15,550 to 650 rank range. That is a Fibonacci retracement. Fibonacci retracement 23. So this is what we are talking about, right? Yeah. And the previous swing low, and it is also a previous resistance. Support. If that is broken, you have 7350 to 450 range. That is which is the previous swing low and the previous resistance. And if that is also broken, you have 17,250 to 17,300, and below that it is 17,000 rounding number, right? So these are all the supports that you see on the Nifty right side. So this is what you see, right? Nifty supports below 17,850, 7650, 17,450, and then 17,250, below that 70,000. Upside, you have the Fibonacci projection that you can see, which is a resistance. So the first resistance upside is 17,950 to 18,000. 18,000 is the biggest hurdle of the first. Then you have 18,350 to 450 range, and then you have the previous all-time high of 18,600 and 50 and 600, that range, right? Resistance below, and right, so current resistance of 18k, 400, 350, 400 range, 650 range, right? Bank Nifty, how does it look like? Upside you have immediate resistance seen at 40,000 and 40,200 range, then you have 41,000, then you have 42,000. Downside you have 39,500, which is a support first. If that is broken, then you have 39,000 range, which is natural placement 23, and then if that is broken, you have 38,400, which is a previous swing low. That is also broken, you have 38,000 rounding number, and then below that 37,700 to 37,800 range. So they're all the supports and resistance for Bank Nifty that you are seeing here. Let's look at the momentum and the trend using the indicators. So the RSI is the momentum indicator that we're using, and it has lost the momentum in the daily, but weekly and monthly the resistance is intact, bullish. Right? We lost the momentum to the sideways, not bearish yet. Nifty has a 5-bar bullish momentum divergence from the weekly candle which you're already seeing, and it is in progress. It's kind of confirmed, and that's why Nifty has bounced up from the previous swing low. Now that's about, so momentum wise both have short term losing to the sideways, but otherwise it's fine. It's not too bad on the high time frame, so the medium and the long time frame. ADX indicator is indicator for that trend. So here we can see that the bearishness zone is where we see the DMI for both indices on the short term daily candle, but on the long term it is in the bullish zones. Both Nifty and Bank Nifty in the bullish zones. Okay? But the problem is it is bent. For the Nifty, the trend is bent and is losing the strength. But on the Bank Nifty, is still on the weekly time frame. In the medium term, the trend is still intact and rising up. But short term, both have lost to the bear zones, and as well as the strength also is weakened. So that is what you see in the trend. So this is the momentum that we're talking about, right? Momentum is fallen to the sideways. It has to come up here into the bullish zones. Bank Nifty, this has to come up here. This is the divergence of the momentum. Price is rising up and the momentum is falling. So this is bullish. So it has bounced and then market price was bounced. So that is in action. The target for that, the previous all-time high. May or may not happen, but it is a divergence in action on the Nifty like that. Now Bank, so look at the ADX trend indicators. We are seeing that this is short-term chart, right? You can see that it is the bend has already happened on Nifty. It is already in the bearish zones in the short term. It is already being bearish zones on the Nifty also. The bend has already happened, but on the higher time, this bend is not there. It is still rising. Is what we're talking about. Now, next analysis that we'll be doing is the open interest and the volatility. Volatility, the India VIX, if you see, you can see that it has dropped around. Good drop has happened. How much percentage has happened? It's 8.5% of cool off has happened on the Nifty, but it's still not gone to below the 15. So 15 to 19 is still a range. Last week there was a cool off that happened because of the Diwali and festive and the very short peak and all that could be the reason. But yeah, so it is still in the range, between 15 and 90 is what I said. So VIX has fallen off, but implied volatility is 14.2 and HIV is about that. 20.3 is okay. IVP is risen to 40 levels, but has dipped to 25 levels. So that's the implied volatility level, and the range seems to be right now getting formed. The volatile moves are happening between 15 and 90. That's what's happening. Now, open interest data, if you see that, is the short build up on both Nifty and the Bank Nifty if you exclude the move trading day. 2 hours trading, so ignore that. So futures data is also showing that same thing. Right, the short build up that happened on the Nifty and the Bank Nifty. So Nifty, you see the supports are there written at the 17,000 highest, but that will be heads person, not go too far. So 17,500 is a critical support zone, that critical put writing that you can see on the charts, which may be relevant. Resistance similarly is 18,000, which is also relevant with the charts, to match with the charts. So there is going to be, there is already heavy call writing on the 18, so as we broken if let's move. And so 17,500 to 1,800 may be the range, but there is enough call writing on the 18,300 also. If that is broken, then it may not go beyond the 8,300 for the next week moment. So put call ratio is not bad. 0.84 is not bullish yet, but not bad. Bank Nifty also put call ratio is points. That may be because of very short week and the trading is nearly not much trading has happened on the November 11th expiry. So Bank Nifty, if you see 39,000 and 40,000 is just like 7,500 and 18,000 is the range. Bank Nifty is going to be 39,500 and 40,000 probably. Right, so 39,000 is got good put writing and 39,500 next, and then highest rating resistance call rating is seen at 40,000 and then above 41,000. 0.68 is also not bullish at all. Right, so Open that is not showing in Banknifty is too much bullish, right? Uh, yes, yeah, so the range is based on the open interest here, right? This is what we are talking about, right? So this is left to the Nifty and right is Banknifty. You can see the huge writing in the 18K, huge writing in the 14K, and the supports down there, right? So curve unwinding has not much happened, right? Supports are there, uh, so the fight is for the 18,000, fight is for the 40,000, right? Now let's look at how the sectors performed last week. IT sector bounced up 3%, you can see, previous week, right? But the weekly momentum is, yeah, fine. The daily momentum is still in the sideways. Weekly momentum is good. So we need to wait more time. FMCG also moved up 1.5%, and the weekly momentum slipped sideways. So it is still in the sideways, and we have to wait for that to catch up. Short and medium uh, is fine. Right? So metal sector, if you see, it's 2.5% up, and the momentum in the weekly and daily has slipped to sideways. We have to wait. Stay away from FMCG and metal and IT for now until momentum catches on the short term. Auto sector is a bit. It has moved to moved greater than 2.5% last week and has formed a so previous week it had formed a hammer and it bounced up and then bounce continued and another 2.4%. And the momentum also has picked up in the bullish one. So this is some place where we can pick up the stocks for the long trades, but with caution. We need to check whether the momentum is not dipping again. So as long as it sustains the momentum, it is fine. Pharma sector dipped a bit 0.5%. There is indecisive doji candle is there. Momentum is lost in the short term, so let us wait. Reality is another good one. Along with auto, reality also is bounced up 10% nearly up. So short term momentum also has got up, and then remember that we had a bullish reverse directions on the weekly basis on this, which has actually worked and confirmed. Right? And cup and handle of the pattern is also very powerful. Candle formation, handle formation is what is happening. However, it had broken out 35% up before the momentum lost a little bit. Now it is back again. So reality auto bullish. Others still sideways in the short term. Let us wait for some more time to take up stocks in that. Right? Now institutional participation is where it is at. So the selling did not happen too much last week because there was festive season, hardly any trading days were there. Domestic institutions bought a little bit, so balance. So hardly any action happened. But yeah, long derivatives of the FIs side also as did last week. So participation was very less last week, but previous weeks were heavy selling. So that is something to be cautious about. Now, global markets and commodities. If you see, the US markets were all green after the Fed event. S&P 500, Dow Jones, Nasdaq, everything is green, bullish, moving up, making all-time highs once again. Dollar index is also green, so it is trying to take out the resistance that attempted once again, and then some kind of indecisive small body candle is what happens. But the good thing is that some kind of intervention has happened, and the US currency has got, as rupee has gained, and the USDINR currency got traded. Following back to the channel top, and also the previous resistance at the 75 level seems to be working, and surprisingly it has gone below 75 even when the dollar seems to be strengthening. And the reason may be because crude oil had fallen 30% down and reached the from 84, 83 kind of levels. It has fallen to 80 levels. Still at the multi-year high levels, not good, but it has cooled off. Is some good thing for the Indian economy. The gold is broken out. Right? It shot up 2%. You can see that it is broken. This is a channel. The cup and handle part is broken out of that channel, and it has immediate resistance on the upside. Whether it will sustain this or not, and again on the top, it is a huge number of resistances, but it is going up and it is super bullish. The crude oil, you can see that it is dipped in the last 2 weeks, which is probably why USDINR has performed. USDINR has dipped and cooled off, but US dollar index, US dollar has got is still strength and trying to take out the second resistance that is being attempted 4, 5, 6 times. Don't know whether it will take out or not. Once that takes out, it probably hit back the currency pair also probably, although it's not directly correlated. Actionables, LNT, Class 9 Turbo, there's a rounding pattern, breakout is happening, there's forming a channel there. Good retrace and the stop loss with this neckline is a good trade, good volumes, good momentum, and a good trend, on all time frames, right? So right side you have State Bank medium, public sector banks are doing good, the volumes are good, the momentum is great, and it is trending up on all time frames. This is weekly charts, and it is broken out of the previous resistance zones. It is getting it in trending channels, so sell and last and double 2 picks. Now index trading, if you see option trading strategies, if you see, this is a double counter diamond spread, which is giving which is basically selling the 7600 and 17200, which is giving a range between 7500 and 18200, which is well within the range of the support and the resistance and the operators that we have seen. And if next week it is not breaking this, then we get a good risk reward of reasonably good risk reward. The lots can be increased based on your risk capital, and max loss also is not too much with less capital. This seems to be good probability also of the probability of making profit is also high. So this is a good trade for the next week. It's a weekly double diagonal current risk spread strategy on Nifty. Now the wrap up is that Nifty had made good correction of 5% down, right, earlier, but last week it bounced up. Bullish divergence is there, but it seems to be having some resistance in the 18k. Bank is also 14k is the resistance. It also had bounced up, so it's not ready to fall down. There is a Bollinger Bands which is showing there is a consolidation there is there. So the bias is on the short term. This might be a still because institutions not participating on previous weeks at heavy selling. And the moment is also slipped and trend is also slipped in the trend. So there will be catch one on this institution selling were heavy earlier. So there is a potential of an up move is there. Divergence is still in play. These are still at a support zone. So not rolling out, there is a chance for it. But the overall, the view, my bias for this week immediately would be mild bias. US markets are doing good. Potential chances of the divergence on the weekly basis on Nifty is there, but basically it is going to be consolidation for the coming week, but within a very volatile, very high band range, right? That is clear on the Bollinger Bands. That's what it is. So India VIX is still not fallen off the 15 level, so near to 16 and 9 is probably. So there is a chance that it can be in the road upside towards 18 once again. Markets could fall further a little more to take the next support region, but still, it may not be a big crash that may happen, maybe consolidating. So implies and current spreads will do good whenever there's a weak price, and then volatility at this range normally it will work good. And if you're bearish or bullish, taking long or short, do current spreads and not naked calls, because the risk will be defined and then you'll not lose too much again. Always take another trade. So 5% correction does not mean there is no correction in time. There can be further dip that even 10% is not very big correction. You can't say that after such a big, such a very vertical big moves that has happened during the last several months. So anything can happen, but yeah, so that's why I'm having a mild bearishness view. But if I see that resistance levels that of 18k and 40k is broken, then it is time to think about going long till the all-time high. Anything beyond that, we don't know, because Bollinger Bands are showing that the consolidation may be there for several weeks from now. So that is my view. I hope this helps you to understand what exactly is happening in the market the last several weeks. What happened? What is the open interest data says? What is the volatility says? And what institutions are saying, doing in the market, and what global views are there. And accordingly, I hope this helps you to take your own view and do your own trade plan for the next week. If it helps, consider hitting the like button and share it with your friends and colleagues so that everyone benefits. And thanks for watching, and happy trading and happy trading.